All right, today we're charting a course straight through the investment landscape of 2026. And look, this isn't just another year. It's shaping up to be a massive inflection point. We're talking about powerful intersecting forces in tech, finance, and property. Trillions of dollars are about to be set in motion, and that's creating both once-in-a-generation opportunities and some pretty significant risks. So let's break down where all that money is flowing and, more importantly, what it all means for you.
We have to start with this piece of wisdom from Warren Buffett. It's the perfect anchor for this journey because, let's be real, in a market where entire industries are being totally reshaped by AI, new digital economies are finally going mainstream, and a real estate reckoning is on the horizon, just holding onto your capital isn't playing defense. It's the only way to make sure you're even on the field to grab the opportunities that are going to pop up from all this chaos.
So here's our map for today. First, we're going to define exactly why 2026 is such a pivotal year. Then we'll explore the three key territories: the wild AI frontier, the brand new world of digital assets, and the seismic shifts happening in real estate. After that, we'll get you equipped with a compass, a timeless framework for investing before we send you off to chart your own course. Okay, so what makes 2026 so special? Why all the focus on this one year? Well, it's not just another tick on the calendar. It's a moment defined by three massive converging flows of capital. I'm talking about a tidal wave of money that is literally reshaping entire industries. And when you see the numbers behind this wave, you'll get just how powerful these currents really are. First up, artificial intelligence. Global spending is projected to hit a staggering $2.52 trillion. This isn't just about building slightly better chatbots, okay? This is a fundamental retooling of the entire global economy. It's an infrastructure build-out of historic proportions. Seriously, on par with the construction of the internet itself. Next, digital assets. After years of being in this regulatory gray area, major laws have finally brought some clarity, and that's pushed the entire sector to a new all-time high valuation of $4 trillion. Wall Street is no longer just dipping a toe in the water. They are diving in headfirst. And they're bringing all that institutional capital and mainstream adoption right along with them. And finally, we have real estate. A massive $1.8 trillion wall of maturity in commercial real estate debt is coming due. Think about it. Loans that were written in an era of basically zero interest rates now have to be refinanced in a much, much more expensive world. That's creating both immense risk and, for some, incredible opportunity. These three forces, AI, digital assets, and real estate, are the defining features of our map. Okay, let's zoom in on our first territory, the AI frontier. This place is brimming with incredible promise, but just like any frontier, it is also fraught with danger. The key here is to really understand the terrain, because the opportunities and the risks, well, they're two sides of the very same coin. Now, when Michael Burry talks, people tend to listen. The investor famous for predicting the 2008 financial crisis. He sees a direct parallel between the AI frenzy we're in right now and the dot-com bubble. Capital is just flooding into the space, and it's pushing valuations to levels that are, well, they're pretty hard to justify with the money these companies are actually making today. And this illustrates his point perfectly. Just look at these numbers. Palantir is trading at 110 times its sales. Tesla, which is increasingly being valued as an AI and robotics company, is over 300 times its earnings. And OpenAI, the leader of the pack, is projected to lose $8.5 billion in 2025 alone. This is the financial reality that's fueling all these bubble concerns. Now, the lesson from the dot-com era isn't to avoid innovation. It's to get really good at telling the difference between the hype and the actual businesses that are generating real revenue. So what's the actual technology driving all this excitement? It's the shift to what's being called agentic AI. We're moving way beyond passive tools like chatbots that just answer questions. Agentic AI systems are autonomous actors. They can carry out complex, multi-step tasks. I'm talking about diagnosing equipment failures from video feeds, autonomously managing entire supply chains, or executing trades based on market data, all without a human in the loop. That's the core technological leap right there. Now, it's so easy to think of AI as something that just exists in the digital world, floating around in the cloud. But that is a huge myth. In reality, AI is a business of addles. It requires a massive physical build-out of data centers, all organized in this three-tier architecture of cloud, on-premise, and edge devices. The real bottlenecks aren't just code anymore. They're physical constraints, like getting access to gigawatt-scale power grids, finding vast amounts of water for cooling systems, and the incredibly complex art of advanced chip packaging. And the final major risk on this frontier is regulatory chaos. In the US, you've got this big tug of war. The federal government is pushing for a light pro-innovation framework. They even created a task force to challenge state laws they think are too heavy-handed. But at the exact same time, you have states like Colorado and California moving ahead with really strict consumer protection laws for what they call high-risk AI. This creates a messy legal gray area, leaving businesses totally uncertain about which rules to follow, and that is a huge source of risk for any investor. Okay, let's pivot to our second territory, digital assets. For years, this space has been called the Wild West, right? It was just operating in this thick, opaque regulatory fog. But by 2026, that fog has lifted. A whole new architecture is in place, and Wall Street is moving in. This timeline really shows you just how fast everything is changing. In July 2025, the Genius Act passed, creating the first federal rules for stablecoins. Then, the Clarity Act is being debated to finally end the turf war between the SEC and the CFTC. And at the same time, tax enforcement has gotten incredibly sophisticated. The IRS is now using AI to track transactions, and a new international framework called CARF means over 75 countries are automatically sharing crypto data with each other. The days of non-compliance are pretty much over. So, how do you navigate this new, more structured world? Well, the most crucial point is security. The recommended protocol for 2026 is a tiered approach. You keep a small portion, maybe 20%, in a hot software wallet for active trading or everyday transactions. But the vast majority, 80% or more, that needs to be secured offline in cold storage using a hardware wallet. That means it's completely disconnected from the internet, protecting it from remote hacks and theft. This is just non-negotiable best practice now. Now for our third and final territory, the real estate quake. This is a foundational asset, right? It's something most people see as a pillar of wealth. But in 2026, that foundation is facing a serious reckoning, and it's all being driven by that massive wall of maturing debt that we talked about earlier. But before we get into all the market dynamics, I want to ask you a really fundamental question. It challenges a core belief for a lot of people. Is your house an asset? Just think about that for a second. According to the investment philosophy of Robert Kiyosaki, the answer is no. And this slide breaks down his view perfectly. An asset is anything that puts money in your pocket. It generates positive cash flow. A liability is anything that takes money out of your pocket. Your primary residence, with its mortgage, property taxes, and constant upkeep, continuously takes money out. A rental property that generates more in rent than it costs in expenses, that's an asset. The entire distinction is about the direction of cash flow. So if you're not just hoping the market goes up, how do you actually create value in real estate? Well, one really powerful strategy is the Brumar method. This is an active approach. You buy a distressed property, you rehab it to increase its value, you rent it out to create cash flow, you refinance to pull your original investment back out, and then you repeat the process. It's a system for forcing appreciation and potentially achieving infinite returns because your capital isn't stuck in the deal anymore. We have now explored the new terrain of 2026. We've seen the opportunities and the dangers in AI, in digital assets, and in real estate. So now, we need a compass, a set of reliable, timeless tools to help us navigate this brand new map. This framework is built on 4 pillars, simple but powerful. First, fundamentals. This tells you what to buy. Is this a healthy company or a sound asset? Second, technicals. This tells you when to buy by analyzing market sentiment and price trends. Third, cash flow. This tells you how to structure the investment. Can it generate income for you while you hold it? And fourth, and this is the most important pillar, is risk management. This is all about survival. How do you protect your capital so you can stay in the game? And here's how you can actually put those pillars into practice, using a top-down routine. You don't start by looking for a single hot stock. No, you start at the highest level, the broad market. Is the overall tide coming in or going out? You look at indices like the S&P 500. Then you zoom into the sector level. Which industries are performing well in this environment? Where is the money rotating to? Only after you've done that do you zoom in again to find the strongest individual companies inside those leading sectors. Okay, we have covered a lot of ground today. We've mapped out the entire terrain of 2026 and we've equipped you with a compass. So the final step is deciding where you're going to point it. We've laid out the inflection points, the frontiers, and the frameworks. The map of 2026 is now in your hands. So the only question left is, which direction will you point your compass first? Thanks for joining us.